Hello, everyone. You're now tuned in to the Millionaire Millennial. I'm your host, Stack Banks. I am recording from my apartment today, and right now I have a screen pulled up, a couple of them that hopefully you guys will get a chance or get some value out of. Not get a chance because I'm here and I'm giving you a chance right now to take a look at it. But what we're going to be talking about today is Bitcoin. Okay. Um, I've been watching the news cycle a lot recently, especially this last week, and they've been talking about the price of Bitcoin, the volatility. You constantly are hearing about the Bitcoin price crash. Okay. So I am here to help you guys make sense of it all and hopefully clear some things up. Um, Number one, this is not investment advice. This is purely educational, not only for myself, but hopefully for you guys. I hope that you guys get some value out of this. But the reason why I do the stuff on crypto specifically is because when you look in the news cycle, I believe personally, there's a lot of false information that's being spread, and there's a lot of narratives that are being pushed that don't make any sense. And uh, a lot of it, I think, is misinformation, and I think it is designed to fool retail investors, aka you guys out there in the Web3 space who are investing in this stuff or just coming into it. Those of you who have not been in this space for a while or got into it just maybe within the last couple months or the last couple weeks or a few years or whatever, and you're trying to make sense of what is Bitcoin, what is Web3, what is crypto, what does it mean to you, right? And what does it mean as a investment vehicle, as an asset, store of value, all these things. Okay, so hopefully today I will be able to provide you guys some clarity, and you'll get some value out of that. A lot of times too, I notice at least on YouTube, you guys are not necessarily consuming the full episodes. You guys are watching. A lot of you guys are watching the short video clips, which is great. So I'm usually not. I would imagine very clippable. I know we put clips up, but hopefully I can say some things that will impact you guys and do it in a short and concise manner. So I'm trying not to feed into the typical things I see where people are very demonstrative, right? And they give you the clippable content by being loud or yelling and things like that. I might get a little excited in today's episode, but it's not really my personality to do that offhand. But some of these things I'm going to try to be or express to you guys how adamant I am about these things, because I think a lot of people are consuming this information and regurgitating it to their friends or making decisions based on it, and you aren't considering the source of where this stuff's coming from. Okay. So right now I've got a website pulled up called Crypto Bubbles. Those of you who are in the crypto space, I would encourage you to use this. I don't use it very often to make investment decisions, but I do like to use it as a tool to compare the market across the board and just get a look at what's happening. So I'm going to go over to this website right now. So Crypto Bubbles, if you guys can see here, .net, essentially tracks, I believe, the top 100 or 300 different cryptocurrencies by market cap, and it's full of tons of useful information. You can actually break it down depending what country you're on by the actual currency that makes the most sense to you, and then you can actually click on these bubbles and you can break it down by year, month, day, week. I don't like to use this chart necessarily when I'm explaining long-term strategies or making observations that I see in relation to, where these cryptos started at, because most of these charts start right around 2021 or 2023. They usually only go back about a year or so. Some of them will go longer, like with Bitcoin. I've been able to actually pull up this chart before in the past, and it's been longer. But just looking at it, specifically talking about Bitcoin, and actually before I even do that, what's kind of cool too is you can drag these bubbles around and stuff, and they're interactive, and they actually shift and change depending on, this actually shows This is more so a marker of volatility. Okay. It's a tool for you guys to see the volatility. And the bigger the bubble, the larger the percentages. So those of you right now who are worried about the volatility of Bitcoin, and maybe you guys don't really understand what volatility is. Volatility essentially is talking about the movement of the price of the asset. So one day it is 60 grand, the next day it's 50 grand, the next day it's 71,000, or moment to moment, whatever. The time frame doesn't matter, but what's occurring is the price is shifting. We call that volatility. Okay. So as you can see, the volatility on Bitcoin over the course of a week is very, very low. Okay. And then when you break it down by month, excuse me, not by month, when you break it down by year, you're seeing more drastic swings, right? But if I could actually expand this chart out, which I had pulled up, let's see here, or did I get rid of it? I'll pull it up, my Coinbase account, because it actually gives us a further look back at the Bitcoin charts. But we'll just go in here really quick. We'll go down to Bitcoin. Okay, so this chart, when you look at the chart the same way, relatively, in comparison, they look the same. Let me move this over a second. Okay. Relatively. You guys see the similarities there? How those charts look? Now, if you're someone who's only looking at Bitcoin in a 1-year cycle or a 3-week cycle, right, you might have the tendency to believe, oh, it's crashing, right? Because look at this. 73,000 down to 68,000, 65,000, right? Almost $10,000 difference. But when you expand the chart out, let's go all time. These dips are not that significant. Okay. This volatility, this up and down motion is not that significant. And actually this chart should go back even further, but it doesn't. So this chart starts in 2013. Okay. So Bitcoin came out in 2008. So you were missing 5 years of information where one Bitcoin, you'd send, I believe the first Bitcoin transaction was 20 Bitcoin for one, or 100 Bitcoin for one pizza. Okay. So 100 Bitcoin was worth at one point in time about a $20 pizza or $10 pizza or whatever it was. And then right around here, when Coinbase starts tracking it in 2013, it's worth about $100. Okay. So within the span of 5 years, it went from worth essentially nothing. Because even then, pizzas, you could sell a pizza for $1. And especially back in 2008, I'd imagine, especially if you're doing it at scale, if you're the pizza owner, that pizza cost you pennies. The price that it was sold at, I would imagine, was cheaper than what would actually be listed on the menu. Okay. And you're dealing with the first of its kind in cryptocurrency that's never had a value attached to it. So you're talking about something that essentially went from being mined to then exchanged for a real world asset. much similar to, say, a piece of gold or something like that would, right? At its first inception. Okay. And then over time, over the course of the last 11 years, you've seen this asset go from worth about $101 to now, as of today, relatively $58,000. Okay. So you are looking at about a 57,000% increase of this one asset. But in the news cycle, you hear every day, Bitcoin is crashing. Bitcoin is crashing. Why is this? Why do you think you're hearing this constantly? You guys have to use your brains here. You think it's because this asset is not worth anything? Do you really think Bitcoin is going to go to zero? When the very first day that it was used, it had immediate value. So how is it ever going to go to zero? You guys have to wrap your head around this concept that even though you have money in an asset, especially a crypto asset, you are not the only one. I personally find it incredibly unlikely, barring some type of nuclear event, some massive, major financial collapse of all systems across the board, and probably us also then losing the internet is the only way I see Bitcoin or any crypto asset going to full zero. Any of these established projects, barring rug pulls and things like that. Just someone is always going to be willing to pay something for it. When Bitcoin was $13,000, people were paying for it. When it was $8, people were paying for it. When it was $100, when it was $150. Trust me, when it's $150,000 or $150 million, people will still be using it. And the price is only going to go up. Look at the chart. And I don't mean only as in it will always go up, but I'm saying when you look at it over time, this will trend upwards. Look at the data, okay? And you don't have to believe me, okay? This is the other bit of it. You guys can listen to whoever you want out there. If you want to listen to CNN, Fox News, all the financial gurus, all these guys who have just got into crypto, right? All of a sudden, and they're telling you, sell your Bitcoin, don't hold on to it, find a price point that you're comfortable with. And then, if it bail out if it gets too low. That's what this was. Everyone that got into crypto and bought at $64,000 and then the price just crashed. We're talking about 2021 with FTX, when basically half, if not more, of the crypto related space was getting scammed and putting their money into these exchanges. Okay. So from this space till now, almost 3 years, people are gun shy and basically got shook out of the market. There were people that were selling their Bitcoin at this price. Okay. When they should have just been holding and possibly buying more, because as the price spikes and they realize returns, if you're someone that bought Bitcoin at $16,000, $17,000, or even back here, right, or further along, and you're still holding, you probably understand the nature of this asset. You cannot look at your Bitcoin charts week to week, day to day, month to month, right? If you're someone that's looking to make money out of it, and every time you see a price dip, you get scared and you sell, you're going to lose money. It's called timing the market. Almost no one can do it. And what the concept is that you're basically trying to buy an asset low and sell it when the asset is high, when the price on it is high. You want to time the market. Okay. Because at some point, all of us are buyers and all of us are sellers. Very, very, very few people are probably going to take this asset and hold on to it and never move it at some point. And then even when you die, right, if you're going to pass this asset on to someone in your family that you care about, or whatever, maybe give it to a charity, whatever your goal is with this asset, at some point you will no longer be in control of it. And I think most human beings don't realize that. Everything that's in your control now, every asset you own at some point, whether you pass on or you sell it and get rid of it, right? Even if you go buy it again, at some point these assets come in and out of your life. So understanding when they should enter and when they should leave, okay, is vital, especially if you're interested in making money with this asset. Okay. So those of you, and I'm sure I'll get some in the comments who go, he doesn't know what he's talking about. Watch when the price drops, blah, blah, blah. Yeah, the price will go down. The price will go up. That is volatility. Every stock does this. Every cryptocurrency does this. Okay. Gold, silver, oil, wheat, gas, natural gas. The price of all those things goes up and it goes down. Okay. Cryptocurrency, unlike most of these assets, or let's talk about Bitcoin specifically, unlike most of those assets or things, doesn't go bad. It doesn't rot. You don't need a bank to hold on to it for you. You don't need a hedge fund or a large investment fund to hold on to it. You can have self-custody of this asset and hold it and buy it and sell it whenever you want. Okay. If you guys don't see value in that, then maybe you should try and do that with any other asset you own. If you have a gold necklace, try and sell it today, right now, this very second. You will not have a buyer. You have to go find one, or go to a jeweler or a jewelry store, something like that. You have to find a buyer. With this, there are buyers and there are sellers constantly. Okay. And so you have to decide, where do you sit? Are you in this for the short term? Are you trying to devise a strategy where you buy this asset and then the next day you make a bunch of money by selling it, or the next moment, or whatever? There's ways to do it. You're trading on the volatility. That's what that's called. Okay. If that's your goal, you can do it. Good luck timing the market. No one has the ability to do it accurately, consistently. And there are no methods and strategies, except for you have quantitative trading, which is done with computers. And we might get into that at some point. But if you are someone that's seeking to do this by hand per day, or every day by hand, or whatever, sitting at your computer, you're putting yourself at a disadvantage. Okay. Now, why do I say this? Because all of you are getting shaken out of the market right now. Everyone who's selling. Let's go back to the crypto bubbles for a moment. Okay. Everyone who bought here and has only seen a price decrease and is selling out, right? And just going, all right, I'm going to take my loss. You're shaking yourself out of the market. When really what you should be doing is just buying and holding. You don't need to look at this chart every 3 months, 4 months, 5 months. Okay. And I'm not saying that you can't, or that it's not a smart trading strategy or whatever, because there's plenty of people who make money doing this. There's someone who made money when they bought here and they sold, up here at 27,000, and then it dropped down. They bought it for 26, and then it went up here and they sold. Okay. But when you look at this chart over time, okay, Bitcoin hits peaks at times where it will never reach again. Okay. This area where you saw Bitcoin go in for 13 grand, 19 grand, 8 grand, whatever. This stuff, in my personal opinion, it's not coming back. You have too much of the world waking up to what these things are. And if you don't believe me, just look at the numbers. Okay. So there is, and let me look at my time and make sure I'm not going over. So we're getting close. I usually like to keep these about 20 minutes or less. So what was I saying? Oh, if you don't believe me, you don't necessarily need to take my word for it. You need to look at who is buying the Bitcoin. Okay. We're going to talk about Bitcoin because it is the largest of all these cryptocurrencies. Who's buying it? Okay. So I've got an article right here by CoinDesk. And you guys can look it up if you want. I might even link it in the description if I remember to. So BlackRock, a lot of you guys are familiar with BlackRock. They have 200,000 Bitcoin right now for their ETF. Why do you think that is? Because I'll tell you why. Every time that this number drops, you know what they do? They buy some. Every time it drops, they buy some. You don't think crypto is worth holding on to. Right now, it's Friday, the 12th, okay, of July. This came out in March, and this actually isn't even accurate. This is late. I should have pulled up a more recent article. But before this came out, look at what was happening with Bitcoin. Okay, March 17th. It was up here. So they bought, so March 17th, or excuse me, this article came out March 17th. On Friday, the 15th, when Bitcoin was at $69,000, BlackRock bought. Okay. And they were buying all through here at these points, and they've been buying. So what's happening? Retail investors, okay, are jumping out of Bitcoin, or have been, because they keep hearing this bad news. People who bought in over here. or over here, whatever, wherever you bought in at, and you got scared. Oh, it's only traded sideways for however long now. Meanwhile, the big money, smart money, quote unquote, keeps buying. You guys got to think for yourselves. Okay. I'm going to probably just leave this episode here because, like I said, part of this is up to you guys to do your own research. But if you want to know why the price of Bitcoin is falling, it's because of you. It's because of retail investors listening to news cycles that are owned, large corporations, these large media outlets that are owned by the same people who own BlackRock and these other large, massive mutual funds. Okay. A lot of times they own businesses, private equity, things like that. So you guys have got to start getting educated on your money, and hopefully this does part of that. The price of Bitcoin is not dependent on what the Fed chair says, the SEC chair says. It's not dependent on the stock market. It's not dependent on the price of gold. It is its own independent asset. The price of it goes up and down based on supply and demand. And there's a lot of people right now being willing to sell their Bitcoin for cheap. Don't sell your Bitcoin for cheap, folks. Because what's going to happen is BlackRock is going to buy it up, and other companies like it are going to buy it up, and then they're going to sell it to you expensively in an ETF. Or they're going to sell it to your grandparents or whoever it is. So I would call you guys, those of you who are worried about the price of Bitcoin, what's going on in it. You're worried about older generations not understanding it or buying into these ETFs. Educate them. Educate yourselves and then educate them. Because right now, 1 in 8 Americans owns digital assets, a blockchain asset. That number is only going to go up. So if this is an equitable economy, if this is some of the goals, but one of the goals of cryptocurrency is you bring power back to the people, the power of our money back to us, then part of that is dependent on the end user and you guys being informed and educated. Okay. So when you see the price of Bitcoin go up or down, ask yourself why. Okay. So that'll be today's episode. I thank you guys for tuning in. Hopefully it's been informative. Follow us on all our social medias, the Millionaire Millennial Podcast and myself, Stack Banks. Check us out on Twitter as well. I do believe this one is being live streamed to it. Or this one might be being live streamed to YouTube. So please check us out. Links in the description below. And I will also have a link to the change.org link for Bankscoin as well. That's a personal project of mine that's going to bring compliance to the Web3 space. I would encourage you guys to look out for that as well. So appreciate your time. Good luck out there.